Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs gone, Sonali Basak in. Taylor hopefully will be back, but we're going to count you down to the closing bell today without her. Here to help take us beyond the bell. We're joined right now by Tim Stenovec and Carol Massar, who is out. Kriti Gupta in for Carol Massar. For those listening on radio, watching on TV, or streaming us on YouTube, don't worry, we're all here to parse the crucial moments of the trading day. And Tim, it's been a kind of a topsy-turvy day. We looked like we were heading for a sixth straight decline here on the S&P 500, but right now we're up about 0.2%.
Yeah, topsy-turvy is a good way to describe it. I mean, really fluctuating between positive and negative territory throughout the day, guys. Kriti,
yeah.
I gotta say. The S&P 500 looking like it is not going to close lower finally after 5 days of closing lower, but a choppy session, and it's not like we're seeing those dip buyers come in.
You know, and we were waiting for those dip buyers, Tim. It's so important to think about the fact that every pullback that we've had year to date, even 2-3%, they've been met with dip buyers. So how much of that September seasonality is really in play here, Caroline?
Yeah, seasonality means that people are finally going back to school and they're going back to work, and we're seeing volumes take that much higher, even though we don't see huge moves in the benchmarks in and of themselves. We're certainly getting money put to work in one direction or the other, Sonali.
Yeah, absolutely. And there's a lot of great points made about leverage and whether people are willing to take on risk in this market. To all of your points about dip buying, if there's so many warnings coming up about a better decline, then why not wait?
Yeah, and I mean, we talk about Lori Calvasina's call, and we talk about some of the other strategist calls here, the bullish calls, if you will, but they're sort of bullish with sort of a little bit of a trepidation here, a little bit of a caution here about where we stand right now. And where we stand right now as we get the closing bells, you're talking about a Dow Jones Industrial Average, the outperformer on the day, up 261 points, about 0.8% here as we wait for these numbers to settle in. The S&P 500 looks like it is going to snap that 5-day losing streak to end higher here, up by about 10 points or 0.2%. The NASDAQ composite, though, sitting this one out, only down less than 0.1% on the day, down about 10 points here, but not really participating in much of the rally today. And the Russell 2000 got in on the action today. It's going to finish the day higher by about 0.6%, right around 2441. Of course, a lot of that has to do with some pretty strong bids that we saw today, Tim, with regards to the energy companies. Yeah,
you mentioned Laura Calvasina's comments that we got earlier in the day. We just spoke to Ross Gerber at Gerber Kawasaki Wealth Management. He says a pullback like this, or even one that's bigger, is a good thing. He thinks that the S&P 500 right now is really about 10% too high in terms of prices, and he expects it to come down significantly, and that would be an opportunity to buy, Caroline.
Oh, if we could all have
10%.
a cent or a dollar for every time we hear someone say a healthy correction, then we'd all start to be adding up a little bit. Meanwhile, in terms of a healthy correction, maybe it's an unhealthy set of numbers that you're seeing for the likes of Moderna. Today, we of course had all those headlines regarding whether or not you need a booster shot or not. That was impacting some of those pharmaceutical companies, and therefore in the sector level, for our radio audience, I'm looking at the pharmaceuticals, one of the underperformers, off by 1.3%. Consumer durables were the key underperformer, off by 1.3%, but food and staples also falling. Retailing index on the downside. We haven't talked about that. Well, massive bit of fake news that came in at the start of trading this morning regarding Walmart and whether or won't be getting into cryptocurrencies. It negated that story, I might add. We'll dig into the Litecoin fandango a little bit later. Meanwhile, energy, though, is your key outperformer in terms of industries, up 2.8%. That's as oil rides higher. We see the Bloomberg Commodity Index go higher. Banks also on the upside, even though yields were dipping a little bit today. And autos, Romaine, you were telling us how GM was getting a bit of a bid, and the likes, those unionized EV makers seem to be getting a little bit of positive news today.
Yeah.
Well, Caroline, I want to hit those gainers because you mentioned energy in particular. This is going to be really crucial because one of the top ones is Marathon Oil. This is, of course, coming in anticipation of yet another hurricane, a tropical storm, Nicholas, on its way to Texas right now, really kind of very close to the path of Hurricane Ida. Of course, you are seeing some of those refineries under pressure, and therefore the crude market and, of course, those energy stocks really anticipating that move. That's one of those gainers. I also want to bring up AT&T because last week we heard about a deal, Dow Jones reporting that Fox is nearing a potential deal to buy TMZ from AT&T, and looks like this is a stock that is still getting some heavy trading volume, of course, a couple of days later. Interesting to keep in mind, you're also seeing semiconductor stocks up on a day when you have a lot of big tech really under pressure. The NASDAQ Golden Dragon Index, for example, down 1.1% at the close, and yet semiconductor stocks up, Tim.
Well, you got the gainers, I got the decliners. Let's start with Nike. Shares finishing the day lower by 2.5%. BTIG downgraded it to neutral from buy over supply chain concerns, essentially saying, hey, demand is there, but the supply is the issue. We see those ongoing factory closures in Vietnam, and that could hurt the chances of people actually being able to get their hands on the Nike gear that they want. Caroline, you mentioned Moderna shares falling by 6.6% today. A group of scientists in The Lancet argued that vaccines work so well that most people don't yet need a booster. That would mean we are buying less from Moderna and from Pfizer. An advisory committee set to discuss this week Pfizer and BioNTech's application, though, for their booster. Also keep an eye on SPCE, Virgin Galactic, finishing the day down by close to 3.6%. The company delayed its first commercial space mission, this one with the Italian Air Force. This is different than the issue that the FAA has raised, the FAA investigation related to that July flight. Still true is saying that it's not impactful to the long-term thesis on the stock, but still finishing the day down close to 3.6%.
Have we got SpaceX this week?
Sorry?
Haven't we got SpaceX?
We do, yeah. It's set to launch from Vandenberg Air Force Base.
Tim, our resident space expert. Meanwhile, let's look at what's on the higher side when you're looking cross assets at the moment. I'm looking at the currency vertical when you're looking at global macro movers. What's on the higher side? Commodity-related currencies. We're seeing the Canadian dollar up 0.3% against the US dollar. We're seeing the Norwegian krone doing well as well, up by 0.3%. Why? Because this is a story of commodities really ramping higher. You just saw the headline coming across the Bloomberg terminal of the Bloomberg Commodity Index at a fresh 10-year high. You've got aluminium, I'm going to say it that way, up at the 13-year high, natural gas at a 7.5-year high, nat gas up almost 5% is where we saw it, 5.182. WTI crude also getting a bid, up 1.3%. We're at $70.65 on WTI crude. Why? This is all about the ongoing worries of storms, about the implication that has for production, and of course some of the supply side wranglings when you're looking at aluminium. So clearly a money to be made in commodities. A mixed picture when you're looking at sovereign bonds. I'm seeing money move into the Japanese 2-year, for example, 2.5 basis points lower, and money moving into the US debt as well. Romaine, you have more on that.
Yeah, absolutely. Look, it was kind of a mixed day for treasuries. You did see some bids come in here that pushed yields down here on the day here. Of course, a lot of this is really the setup for what's going to happen in about 16 and a half hours time when we get that US CPI data here. It'll be interesting to see how not only how the long end of the curve reacts, but that belly of the curves that we used to talk about a lot, and whether or not that sort of one print here and you add it up with the previous two prints that we have, which of course were a little bit of a shocker, whether that's enough to sort of drive the perception here that maybe this is a little bit more than transitory, Tim.
Yeah, I'm keeping an eye on Oracle because shares just crossing the Bloomberg right now. First quarter adjusted revenue coming in below expectations, $9.73 billion versus estimates of $9.77 billion.
Yeah.
Shares lower by about 2.7% right now. Adjusted EPS coming in at $1.03, beating estimates though remain of 97 cents.
Yeah, just sorry, while you were speaking, Tim,
yeah.
I was looking crossing the wire. Intuit doing a big deal here. This is for a Mailchimp. Of course, anyone who's listened to a podcast can't get away from those darn ads. But apparently those ads are worth $12 billion.
$12 billion. That's higher than the $10 billion that was earlier reported.
Yeah, this is a big deal here for Intuit. Of course, and really, obviously a big deal for Mailchimp with a $12 billion valuation. But what I think is interesting about this, guys, is really the idea that Intuit gives that opportunity here to kind of diversify its business a little bit. And this could have some huge implications for the company should this be pulled off. And we should point out this is, they did put out a statement. So that's coming in $12 billion.
It's interesting that amid this narrative, we've all been wondering what the direction of big tech and small tech is going to be in this inflationary outlook. If we do get a CPI print that runs hot tomorrow, if we do then foresee interest rates to be on the rise, what does that mean for your growth story, your key growth names for these slightly smaller tech names such as Intuit? Does that still remain the buy?
Yeah, and what's interesting also is you see these companies really switching it up on investors and investing in the future via M&A, via technology. And regardless of interest rates, you do generally see investors rewarding executives who are willing to shake things up a bit.
Sonali, it's interesting. We're talking about yields here. We're talking about inflation. We also got the New York Fed's metrics coming out this morning. The 30-year median inflation expectations hitting 4%, up from just 2.54% at the end of 2019. Now, that is an all-time high, but I do want to point out that data series only goes back to 2013, but still some pretty strong numbers. If that's an indication of what we're getting in the CPI print tomorrow, we should see yields higher, but really it's anyone's guess.
Yeah, it's not just what we see with inflation, but also what consumers expect when it comes to inflation, because if they expect to be paying more, they adjust their spending habits. And also, to what extent they actually ask their employers for more money and to what extent employers have to pay.
But isn't this sort of part of the debate, though, Tim, is that there are a lot of folks out there who will say that that's already been felt by at least by a certain income class here in this country, that inflation is real. It's been here for a while now. And for them, it has been sticky and it has altered their spending habits in a way that I think has started to show up in other economic data points other than the inflation reports and with regards to some of those personal spending and household spending numbers.
Yeah, I think that's true. And I think it remains to be seen to what extent that group of consumers pulls back. And if some of those consumers do end up jumping back into the workforce or changing jobs. Remember, there is this imbalance between the number of jobs available and the number of jobs that people are actually going for right now. Guys, that is going to do it for our cross-platform coverage this afternoon on YouTube, on Bloomberg TV, and on Bloomberg Radio. We will see you tomorrow, same time, same place.